I'd like to draw your attention to something that happened this afternoon, June the 2nd. It's a Tuesday, that's important. And what we were looking for is a long trade that was going to move all the way up to about 75, 76 in that range. We're going to show you why, and you can see on the chart what we did. Now we got in early before this little drop in here, and we were going long, and I just held it. I was so confident about this. I just held on to the trades and just averaged into their position. In particular, we want to draw attention to this subgraph on the chart that is contained in the Premium Threshold 10 workspace. Now, what we typically want to see happen here, when this slow CFB indicator is truly divergent, that's really the best time to be taking an entry. Now you can see that we got in right as the indicator was moving up, and we really don't have much choice over that because we didn't really know whether it was going to move down. Well, the fact is it did. All the same, when it comes down to this period in here, all right, we're at a lower low in here, and we're at higher lows in here. So it only made sense to get into the long trades. But ideally, right in here, because look at how much higher we are here. Now, we didn't take any more contracts. We only had 9 long. But the key was knowing what was going to happen, or at least have a very good reason to believe that this rally was going to explode in the last hour of trading, and really in the last half hour. Now, how do we know that? As I said, it's a Tuesday. And on Tuesdays, when you look at the initial balance calculation, the probability that the first standard deviation was going to be hit was over 92%. That's over the last 3 months. And it's still the highest even after 6 months, 80% probability. So when we looked at this chart, let me bring it over to you. All right, this is the open workspace with the basic market profile in it. Let's explain this just a little bit more. Once again, the dashed white lines are the high and low of the first hour of trading, commonly referred to as the initial balance. Now from that, we run a 1 and 1.5 standard deviations above and below the initial balance lines. So here's the low, here's the high, and that's what we've been tracking. And as the market came down and broke into the low of the morning, there was reason to believe that this actually could have gone the opposite way. And we were watching that quite carefully. But after 1 o'clock, since this thing was not coming down, we decided we need to get into a long. And particularly because we managed to stay above the open all afternoon. There was more of a reason to believe that this was going to go up. And that's where it went. And that's where we put a limit order in to exit the trade right as we move up into that range at around, oh, I'm sorry, around 77. I thought it was 75. Okay. So here was this was the exit line. We put in this limit order right then at just before 2 o'clock. And we ran that up. See if we can, there we go. Oh, at 75.75. Okay, all right, that's where it got out. 75.75. All based upon the initial balance calculation. It's a very important number to know. And when you know it, you can accomplish some great things. Just wanted to show you that. I'm Rod Kusin, Spooman for Risk.